the topics and the themes relating to corporate tax governance have become so important over the past few years that they have already been, included in a lot of the corporate governance frameworks by a lot of the companies, whether listed or unlisted. Which brings us to why we're here on the topic of leadership as it relates to tax leadership. And we're going to be looking at what role can non-executive directors play in helping us to fulfill that mandate and add value along the tax value chain. And to have that conversation, I have a wonderful panel lined up for you over the next hour or so. If you have any questions that you'd like them to elaborate on, or some clarification, or an issue that you actually want to bring to the forefront, and we can unpack it a little bit further, please feel free to type in your questions in the Q&A facility, which you will see on your screen. Without much further ado, I'd like to introduce my panelists this morning. We've got Edward Kieswetter, who is the Commissioner of the South African Revenue Service. Also, Nazrien Kader, who is the Global Head of Tax at Old Mutual. We have Bonang Mohale, who is the Chairman of Bidvest and Chancellor of the University of Free State. He's also joined by Geoff, who is the Executive Director at ZARX. And of course, right here with me at the BDO head office in Johannesburg, I've got Botha, who is the BDO Head of Corporate Tax. Thank you so much for making time this morning, everyone. So before we get into the actual, Q&A discussion where we unpack a lot of the issues, I'm going to allow a 1 minute from each of our panelists in order to better explain why it was important for us to have this conversation. And Commissioner, I'm going to kick off with you. Perhaps if you can, start off with your opening remarks. A minute would do. Thank you.
Thank you, Nastasia. I think it's appropriate that I just pause and ask all of you to pause in your own minds for a moment for many who have succumbed during this time. Later today, we will lay to rest my cousin and his wife who succumbed in the past week, leaving their children orphaned. And so I think, as you say, this is quite a devastating pandemic, and it touches each of us very closely. And so just let's reach out and embrace each other in spirit as we reflect on those who mourn the bereaved and those who had fallen in this terrible pandemic. Turning to the subject at hand, thank you, BDA, for facilitating this platform. For me, there are three important questions that we have to ask, and how we answer these questions leads to how we frame the problem, and how we frame the problem ultimately will lead to how we will solve it. The first question is, whose problem is this? The second is, am I part of the problem or part of the solution as I think of these problems? And the third is, what more can each of us do to address corruption in society? Because tax morality is really just a lens of societal morality. And therefore, what more can I do specifically, because this is a platform for NEDs as a director of companies, a governor, a fiduciary guardian? What more can I do within the areas of my accountability? And more generally, what more can I do as South Africans? I won't answer all those questions now, but because I obviously have a sense about whose problem it is, I'd like to just give a few seconds of reflection on that. We come from a society that is still that experiences deep structural inequities and inequalities that have come over many, many years, that have created a profile of what it means to be a South African anywhere on the spectrum. And it is underpinned on deep racialization, principles of racialization and oppression. Secondly, we have the residue of social fiber that has been devastatingly eroded and erased in many cases and people are hanging in for dear life. And thirdly, in a divided society, there are the haves and the have-nots. And if the haves think it is not their problem, and we make it someone else's problem, whether that someone else is government or broader society outside of my small, comfortable community, then I would submit we are part of the problem. Just this morning, I received a tweet, which I think I would just want to share and then pause. And this is a very well-known and influential journalist and media commentator who says, "I can't believe what I heard at Zondo Commission today. Acting DG of the State Security confirms money was paid out under pressure from the Zuma executive, not just to the ANC, but to the Zuma faction. Taxpayers' money, unaccounted payments, 9 billion rand, provisional tax." So up to there, spot on. And none of us should remain quiet about the levels of corruption that we see. But then he proceeds to say, "Provisional tax returns are due this Friday. SARS, you are not getting mine. Come and arrest me, gloves off." Now, how do we even begin to address a problem if we think that we are morally justified to commit crime as a defense of crime? Thank you.
Mr. Kieswetter, thank you so much for your time. Nazrien, let's open the floor to you for your opening remarks.
Thank you, Nastasia. Good morning, ladies and gentlemen. I think some challenges put out by the Commissioner, obviously expected Commissioner, no surprises there. I just want to thank BDO for the opportunity to be a part of this panel. Just by way of context setting, I think post-2008, the financial services crisis, tax became the focal point. And I think it was driven largely by governments across the globe, all seeking to broaden the tax base. And I think media attention that was driving accountability towards moral consideration also had a very big part to play in this whole drive towards tax transparency. And the question that you quite aptly put, Commissioner, whose problem is it? And scrutiny of how and where global multinationals actually pay taxes is very much a part of the agenda today. But it's becoming more corporate ethics rather than economics. And I think that shift, besides governments and besides the media, it is also this theme of injustice, so economic injustice, a distrust of large companies in general, and perhaps a slight xenophobia towards foreign companies that are accused of making huge profits in emerging economies and not paying the requisite taxes in country. And so this whole concept and this mantra that perhaps at my age, Commissioner, and perhaps yours, that the business of business is business, that's disappeared. There's a great understanding that there's a distinction between doing business and doing business well, and that has shone the spotlight on the contribution that companies actually make in the communities in which they operate and how they're actually disclosing that. And up until now, this qualitative measure of a company's morals compass, its value system has been very elusive. And of course, there's been attempts by business to self-regulate, so to speak, in light of this crisis, a situation of ordinary citizens demanding greater transparency and the indignation, if you like, Commissioner, the point you made about taxpayers, being quite indignant that and seeing big business getting away with it, so to speak. And up until now, that measure has been quite elusive, but I'm quite excited at some point. The Global Reporting Initiative 207, that has been touted as the global benchmark, but not just a principles-based approach to tax risk management, but more what actions can people actually take and businesses do to show their contributions to society and be a little bit more accountable in terms of the social contract between business and society. Thank you, Nastasia.
Bonang, let's hear your thoughts. I mean, what do you make? I suppose let's start off with your opening comments, but I suppose you might also touch a little bit on what the Commissioner and Nazrien has mentioned.
So one of the things that can only be done by governments is to respond to these unusually deadly times absolutely agree with everything that Commissioner Edward Kieswetter has raised, especially the 3 questions. So the one that is not only in our minds, but it's a question of life and death, is the vaccine rollout. So not even comparing ourselves with developed countries, but our BRICS counterparts. As of the 27th of January, Brazil, looking at vaccine doses already administered, has already administered 579,000. Russia, 800,000. India, 2 million. China, 15 million. South Africa, we are still praying that the 1st of February, the AstraZeneca one will land 1.5 million doses. We were praying that it is the Johnson & Johnson's one because it's a single dose. So the president gave us a herd immunity target of 67%. That's 40 million people. That's 100,000 per day. When one considers that there are already more than 284 vaccines registered, actually in development, 10 already registered, the cost, depending on what type we choose, maybe the foreign exchange, because for now we know it's going to be imported, the dosage, whether it's single or double dose, whether it's imported or made locally. What really breaks my heart is when I grew up, Lennon's was owned by government. Today, government owns a company called BioVac since 2003 in Cape Town with the full capability of producing a vaccine. We're not even talking about making it at home so that we can save the taxpayers' monies. The cost, therefore, could be anything from 2 billion to 18 billion. When one considers that because we have learned from the feeding at the trough of the 500 billion socio-economic stimulus announced by the president, but in particular, the PPE money that was stolen in an integrated and coordinated fashion. In Gauteng alone, 2/3 of that. Only 16.4% of South Africans belong to a medical scheme. The medical schemes collectively have a maximum liability of 7 billion at 2% of all premiums. But where are we in terms of the health of the organization? SARS itself was telling us that they are anticipating probably an 18% deficit, 313 billion. They are tracking ahead of that number. And best estimates will probably be 240 to 280 billion, but the deficit nonetheless. But as a country, as a people with great natural endowments, our debt is still 3 trillion. We are borrowing at the rate of 2.1 billion a day. Our debt to GDP ratio was 93%. But this excludes guarantees to state-owned entities and state-owned companies. When you include those, it's 110%. It's not the percentage in and of itself, because the US of A is on 200. It's our ability to pay. At the moment, we know that we can't even pay for these vaccines as a government. Our debt servicing costs are 20 billion. So of the 70% that Edward Kieswetter collects, it goes only to 3 buckets: public sector wage bill, social security, and of course, debt servicing costs. Our deficit was 4% 10 years ago, it's now 16%. Our GDP growth was going to be minus 8%. Best estimate, it will still be minus 7%. And yet 2021, we forecast GDP growth of 1 to 2%. Our population is 1.5%, which means actually in nominal terms, we're going backwards. So only in 2024, we're hoping that we'll be at pre-COVID 2019 GDP levels. Our exports are declining. Our unemployment is 40%, but youth unemployment north of 60 percentage points. I think it's a powder keg waiting to explode. Thank you, Anastasia.
All right, Bonang, some really important points that you've brought as well to the table, and I suppose we will get to the SARS Commissioner, where we get to unpack where the challenges are for SARS and what has been achieved thus far. And I'm pretty sure that the Commissioner will take us into his confidence. Let's move on to you, Geoff. Your opening comments, just for a minute.
Morning to everybody who's attending here. I'm not a tax expert. I've never been a tax practitioner. I'm just an ordinary citizen who just happens to operate in the corporate world. So my comments and views will be very, very much of a person from the corporate world, although I do have a legal background as well. I honestly don't believe that tax laws can exist in their own little environment. You certainly have to have a tax ecosystem, and that ecosystem will include the tax laws themselves. It includes the taxpayers. It includes the economic environment, and importantly, and just to pick up on what the Commissioner said, and what a lot of people will talk about, will be the social contract between the tax authorities, the use of the tax proceeds, and the willingness and the enablement of taxpayers to want to pay tax. Now, I certainly don't want to get into an argument about tax revolts, etc. But all those aspects have to coexist. You cannot just say, well, you must pay tax because it's the right thing to do. There are a number of angles to that. To ensure tax compliance, let's just look at the laws, for example. The laws have to be seen to be fair. So the way the whole tax model is structured has to be plain, clear, and transparent, and possibly even consistent between businesses and angles. And clearly, corporates are the largest taxpayers in the country, so they bear the shoulder of the tax burden. But the very fact that you've got a corporate, there is an immediate conflict of interest at one level, in that the corporate is actually driven to derive profits. And corporates act in one aspect for their shareholders. And there is a broader aspect which has come in, which is not necessarily a legal aspect. It's still a code in terms of the corporate governance aspect. So if we're looking at non-executive directors, how many corporates across the spectrum actually have a non-executive director? Because in law, there isn't a distinction between an executive director and a non-executive director. Directors have full fiduciary duties to the company, irrespective of the title. The title actually derives out of a governance aspect. So if we're focusing, and the purpose of this is to look at the role of non-executive directors in ensuring tax compliance. The first point I want to make, in that ecosystem, how involved and how knowledgeable should a non-executive director be in terms of the responsibilities and the workings of a company in terms of their responsibilities, which then drives us to the intangible aspect, which is the ethics. Because as people quite rightly point out, and not only just in South Africa, globally, a corporate isn't just there to make profits. It has a much broader social obligation. It's well established. It's also well established that corporates and corporate entities that have embraced that concept of having a much broader focus than rather just on profits actually generate more profits. They're actually more successful companies. So the role of the non-executive director, as well as other directors, is to ensure that the company has the ethical and moral fortitude to ensure that they're embracing the whole concept of being a corporate holistically. I know that sounds very broad and very nandy-pandy, but it is an absolute key to actually driving profitability. Now, in terms of specific tax laws, you have to look at where the tax is being derived. And in a previous speaker, as I've already said, that one of the difficulties is cross-border taxation. Now, certainly as we become a more global environment and technology starts driving where corporates in fact generate their profits from, it's incumbent on corporates themselves to say, right, okay, well, I have an obligation to pay tax, but where does that tax get paid? There are many arrangements and schemes which I don't think tax authorities have grappled with properly, and it's difficult to do so. Where's the place of business? Where's the profit derived? Where should the profit go? Because one of the obligations, obviously, on a director is to maximize profits. Your profit center to the lowest taxation jurisdiction. In one aspect, you're acting in accordance with your fiduciary statutory legislative obligations, but are you necessarily compliant from an ethical perspective of where that tax should appropriately be applied? And those are the questions that we're going to have to deal with, I think, in this discussion.
For that, Geoff. So from the virtual stage, we're going to bring it home and get comments from you, Marcus.
I just need to comment on the panel. I mean, it's an excellent panel, and we have to recognize that. And the opening remarks and comments that everyone has made cannot have set a better scene for today's conversation. I want to take a step back and just explain what brought us to today. And I want to recognize that in that social contract that we have, there's 4 very particular parties that we need to highlight. The first one is the state or government. The second one is SARS. Then it's corporate taxpayers, and this is where today's conversation is going to go with tax duties and responsibilities of NEDs that we want to explore. And then last but not least, the advisors or the accounting firms, my industry and the role that we play. And I think we all have a very in-depth appreciation for the challenges that each of these parties and to the social contract is facing. So I want to just park the political animal, which is government or the state. That's not a topic I want to venture into. Maybe Bonang will touch on that. But let's look at the other 3, or at least focus on the 2 in the middle. Before today's conversation, I had a quick look just at the JSE top 10. And there were 2 very specific things I was after. The first one was looking at the composition of the board and just doing a sanity check. In that composition of the board, how many of the NEDs actually have a tax background or some tax skill or knowledge or something we can attribute to a level of awareness? 3 out of the top 10 had nothing. So I just want that to set in and for everyone just to think what that means. Then I went a step further, again, keeping with the theme of today's conversation, and I looked at the directors' reports in the annual and integrated reports of the top 10. 6 out of 10 had no mention of tax. So if we look at boards, audit committees, and non-executive directors, I think today's conversation is something that's been in existence for many years now. Some of it originated in developed countries through international big accounting firm networks. It came to South Africa. It's something we've been professing to the market and talking about. Tax needs to be on the boardroom agenda. And there has always been a level of resistance, and I think we've attributed it to the market not being mature enough. Africa has got its own particular landscape, very different challenges. We can't take that mold and enforce it here. I mean, there were many arguments to it. In addition to that, I just had a quick look at what are the pieces of legislation out there or regulation or guidance in terms of NEDs and their responsibilities. And there's a number of things. I mean, we have listing requirements. We have King 4. I mean, all the principles are outlined there with recommendations on good corporate governance. There's very specific Companies Act legislation, and the list goes on. There's been endless literature study, write-ups on the topic, and recommendations and best practice being put out into the market. It just never has had an opportunity for it all to be pulled together. And if I were an NED, I would feel very uncomfortable. And I just want to park it there for 1 second and then go back to pull everyone's opening comments together. And that is, we have created a monster of a landscape for ourselves in South Africa because we've had very particular and specific challenges to deal with, and those need to be addressed. But also, there isn't anyone that's put up their hands and said, let's demonstrate leadership, take an initiative and a first step to facilitate change and take action and actually say, where does tax fit into this whole process with that social contract? Because we can't just be on opposite ends of this conversation. And by opposite ends, I'm saying SARS and a corporate, where we have a demonstrable trust issue. And the one doesn't want to be transparent because then the other one is going to have a higher level of scrutiny. We need to move past that and look at what the problems of the country are and how we're going to address those. And there isn't a better platform or place than with NEDs. And in today's conversation, one of the things I'd like to explore is actually take all those bits and pieces out there, telling NEDs what they are responsible for and what they should be doing and how they should be doing it, and package it for tax. I mean, someone like Nazrien has got a mammoth task ahead of her, any tax team in any corporate for that matter, because they are in isolation and there's so many things happening around tax outside of the technocratic aspects of it. We need to pull it together. Someone has to take responsibility for it, and that has to go out into the market. And that's how we're going to create demonstrable trust. And that's how we get the commissioner in the happy place. And that is how we're going to assist the commissioner in delivering on his strategy and plan to turn around the South African Revenue Services and deliver on the strategy that he wants to implement. We have to help one another. So we need the social contract to come together. So this is just a minute, or maybe a little bit more than a minute of my view. I've asked a very respected colleague of mine, who's our global head of tax, Robert Aziz, just from a global point of view, just to give us some of his thoughts.
Hello, Marcus, and all my colleagues in BDO South Africa, and also to your guests, the Non-Executive Directors Forum on Tax Duties and Responsibilities. Before I became BDO's Global Head of Tax, I was a very senior corporate international tax specialist working out of London, and I've been doing that for well over 30 years, so I've seen some changes in my time. And of all the changes that I've seen, perhaps the most important is the subject that you're discussing, which is really about tax governance, and about the number of stakeholders who are now interested in the tax affairs of business. It could be, many, many years ago, maybe not even 10 years ago, but certainly when I started 30 years ago, if you had a conversation about tax or your tax affairs, it would be with your advisor, or it might be with your tax authority, or between all three of those folks. But it would rarely be a wider discussion than that, whereas now everybody's interested in your tax affairs and how you make tax decisions. So it could be your employees, it could be your suppliers or customers, it could be politicians, it could be the press for sure, it could be non-governmental organizations, a whole wide variety of people are interested in how seriously you take your tax duties and responsibilities, how well you're able to articulate them, how accurately you make decisions that are impacting society at large, and so on. So look, for that reason, I really, really welcome that you're having this debate, that you're having this dialogue down there in South Africa. And I'm genuinely interested in the outcome. And I will be reaching out to Marcus to see how your discussions went. It's really important for all of us to engage openly in this debate. It's part of the future. It's a development that will not go away. And I think it's a welcome development. I don't think there's anything to fear about having an open discussion about how tax decisions get made in business and on behalf of society. So I hope your dialogue goes well and that you enjoy the event. Thank you.
To Robert Aziz. So because we want to have this conversation as engaging as possible and you as the viewer to engage with us, we have put together 3 poll questions, of which 2 of them, we're actually going to roll them out one after the other. So the first question that you can think about, now that we've taken in what our panelists have had to say, they've set the scene, they've raised the issues that we hopefully will use this platform to discuss and unpack. The first poll question reads, do you think that tax transparency and enhanced reporting measures should be a regulated requirement for corporate taxpayers and also integrated with a company's environmental, social, and governance initiatives? The second question, which you can vote either yes or no, have you heard of GRI 207 Tax 2019, the Global Reporting Initiative, prior to us having this particular discussion? So we'll check back on those results a little bit later on. And then as the conversation progresses, we'll roll out question number 3. And I'm really keen to see some of those results and see where you're sitting when it comes to some of these issues that we've put forward. Now that we've had all of those discussions, Commissioner, I want to come to you because some of the aspects that were brought to the table with regards to the issues or where corporate tax sits and transparency come back, I suppose, a little bit to SARS. And I'm sure a lot of the people who are watching are curious to know where you're sitting right now in terms of your SARS strategy. I mean, how far are you in being able to tick off some of those boxes? We knew the concerns and the challenges that you were faced with, during 2018, 2019, but just so that we can get a bit of a stock take as to where you're sitting with that strategy, that would be great.
Thank you, Anastasia. I think, first of all, let me say something just as part of the context of this, because it is an audience of directors, and to touch on something that Marcus mentioned. We make the mistake sometimes when we think that the competency that a director requires, or the primary competency a director requires, is of a technical nature. In other words, the level of tax technical knowledge or the level of other technical knowledge. Now, that's not insignificant. It's helpful to understand the industry if you're a director on a board. It's helpful to have some working knowledge of accounting and governance and tax. All of those are tickets to the game. But the defining quality of a director is whether or not they understand their fiduciary obligation from a legal, moral, and ethical standing. And secondly, whether they are clear that they represent not only the interests of shareholders, but they represent the interests of all stakeholders. And as long as directors are rewarded on their returns to shareholders rather than the impact on society, we will never ever get the level of moral compass guiding directors that is necessary for building sustainable, responsible businesses that make a positive impact to society. And so I'd like to say that's the pinnacle, the platinum standard of a director who has an independent mind, able to apply it with due understanding that the interest they serve is that of the whole of society and not simply the narrow interest of shareholders. Coming to what we have done, SARS thinks of its work in executing its mandate in a number of ways. There is obviously the legal framework that creates tax instruments, tax policy that we administer. And that's simply imposed on the economy. And if you have a good economy, you have a higher and a better revenue performance. If you have poor economies, then no matter what you set as targets, you will not yield a good revenue outcome. The second area that we focus on is the ability of SARS to administer its laws, and that is how we conceptualize our work, how we put together a compliance program, and whether or not in the way that we administer the law, we are professional, beyond reproach, and even-handed. We do it without fear, favor, or prejudice. If SARS cannot act beyond reproach, you should not trust us. If we cannot demonstrate an even-handedness, then you would be forgiven if you question our intent. And so that is at the heart of what we do, is our sense that we have to be beyond reproach in the way we do the work. Obviously, we will always have technology challenges, resource challenges, capability, competency issues. That's a journey that we're walking on. But you must never question our moral compass and our integrity. And then thirdly, there is the social compact we have with society broadly, and understandably that when society loses trust in government, and SARS is a component of government, then it has an impact on tax compliance. When the public feel they do not get the benefit from their tax monies, they may feel morally justified to withhold their taxes. When they see high levels of corruption by people who are employed interest, senior civil servants, senior politicians, when they see the kind of questionable behavior, then they are enraged and can be justifiably, one can argue, feel that paying taxes is a grudge purchase. And so we believe that those three realms are the realms we find ourselves in. The realm of tax policy within a given economy, the realm of our own capability, but more importantly, our orientation, and the social compact we build. Our strategic intent, the 9 objectives, addresses all of that. I'm not going to spend time unpacking that now, but suffice to say, in an internal conversation we had earlier this week, we said, never before have we had such clarity around what we are attempting to do as a revenue authority. And I am encouraged by the small but progressive steps we are making to identify where the areas that require our attention. We are understandably challenged with the current level of resources available to the whole of government, and SARS is also affected by that. But if you look at last year, or 2020, in fact, the year we are still in, SARS's response to COVID-19, we will not declare early victories, but I'm encouraged that we demonstrated the level of agility. The strategic clarity helped us to respond. We built 30 applications within 100 days. We created almost all of the functionality taxpayers needs that is online now. There's no reason why you need to come into our branch. We have created more than 90% of our staff. We've enabled them to work from a virtual perspective. We've created a contact center of one where contact center agents can sit in their home without having to fear being exposed to a risk and conduct their engagement with taxpayers. Taxpayers can have a virtual face-to-face engagement with one of our branch agents to resolve their issues. So the work we have done is beginning to lay the platform on which you will continually see the competence, the technical and administrative competence of SARS to make steady progress. Where are the areas of concern that I have? I don't think we are winning the war against crime, and I'm talking specifically tax and economic crime, and that is partly a reflection of the levels of crime and corruption in society, but also the fact that SARS has been significantly weakened over the last number of years to appropriately respond to that. And it was done so deliberately with a corrupt intent. We are beginning to address that, but we have a long way to go. The other area we increasingly see, and speaking to corporates, is in the last number of years, SARS has been an early adopter of common reporting standards, which allows us access to almost 90 jurisdictions to see the financial assets that South Africans have offshore. And we know from that there's well over 400 billion of assets owned by South African, and this is financial assets, not fixed assets. We cannot heart on hand say that all of that money is accounted for from a foreign exchange regularity perspective or from a tax perspective. It is a huge mountain of work that we have to get on top of in order to understand that better. When we had the special voluntary disclosure program, we know that just over 2,000 people used it. We collected 4 billion in taxes by uncovering about 40 billion of those funds. But we think that there is still a significant opportunity there, hence the focus on individuals with wealth and complex arrangements. On the corporate side, we have seen a significant abuse of assessed losses. It has more than doubled in the last 3 years. I've said this before, an assessed loss was never meant to be a tradable asset. It was meant to give you a fair deal as far as your tax is concerned. But if you look at companies being bought and sold for no commercial intent other than to get the tax loss and to then use the tax loss, then clearly one can't stand by and say that was the intent of the assessed loss provision in our tax laws. If you look at base erosion and profit shifting, we see increasingly the abuse of transfer pricing practices under the auspices of directors and boards, which has no commercial rationale. If you look at the interest payments to loans that are granted by parent companies to local subsidiaries that have no commercial rationale, there's no need for the money. It is purely to get money offshore and to erode the tax base locally. So, and I can unpack the number of base erosion and profit shifting practices we see, but we have seen a proliferation of that in the last few years. I call those areas white collar crime because it is done because boards, executives, and directors have a misplaced agenda. And also, on the one hand, you have the moral justification that you can fiddle with your taxes, which you have spoken to. Then you are just part of the problem. And then there's the active participation in aggressive practices that seeks to erode the long-term integrity of our fiscal framework. And so these are our challenges. We are making baby steps in the direction, but we want to give South Africa and this audience the assurance that we will leave no stone unturned, increasing the use of data, using machine learning algorithms and artificial intelligence, expanding our digital and electronic platform are all part of the platforms, the tracks we are laying down, so that the three strategic objectives, which is core to our business, which is we don't want to catch taxpayers out. We want to make it easy and simple for them to fulfill those obligations. We want to clarify what they are. We want to lower the burden of compliance, but we also want to detect non-compliance and act swiftly and decisively in that regard. When Geoff spoke about the ecosystem of tax, it sounds like he stole those words out of my mouth, because that's exactly what we feel, that we are part of a system, and unless the entire system yields, then SARS is not powerful enough or adequately resourced enough. And so a healthy tax system where all of you on the call, where practitioners, intermediaries are part of either ensuring the integrity of our tax system and therefore the efficiency of collections. And ultimately, I said recently, we don't want to collect more taxes by raising the rates or by being aggressive and unprofessional. We want to expand the base in order to collect less taxes, but from more people. That is when it is a win-win for all of us. Let me pause there, otherwise I will get carried away.
So we will talk about all of those things. But Nazrien, I want to come to you on the back of some of the points that the Commissioner has brought forward. And I'm curious, and here I want to tap into your more than 2 decades experience working in that tax corporate environment. How is the relationship between an individual such as yourself as the head of tax in an organization evolved over the years when you consider the, the CEO, the CFO, the audit committee, and the board? Is that relationship getting closer over the years as you have participated, or is there still a gap between that, call it ecosystem or the internal ecosystem, as it were?
Ms. Saskia, thank you for that. I think there's been a dramatic shift, and definitely, I can only speak from my experience at Old Mutual. The CEO, the CFO, the audit committee chair, the executive briefings, I am called to account as the tax manager to actually account for, where do the tax risks lie? How are we dealing with them? I attest at the end of every year to a huge lot of things like, have we put in place the right systems to account for tax? And all of this is accounting to the executive committee and the board. And I think the most dramatic shift, if you like, from my experience as a consultant to now, is the attention that tax is getting, and that sort of tell me about it, as opposed to that more hands-on approach. The board wanting to understand the tax landscape, wanting to understand where the risks lie, wanting to understand how we're dealing with that. For me, that has been the greatest shift. I think the other side of it, and our accountability to SARS, it would be remiss of me not to also mention that I am so pleasantly surprised by the relationship that we actually have as Old Mutual with the South African Revenue Service, and the attention and the collaboration that we get from SARS when it comes to disclosure. And in an organization, and this goes for any large global multinational, the complexity can't be underestimated. You do everything that you possibly can, but a no-risk option is just not attainable. So we know that there is some risk in the system. And when we do pick these things up and we do approach SARS, I think the other big shift for me is the collaboration that we get. Commissioner, that's not to say that we don't get the penalties. We do, but we do try our utmost to argue out of them. And I must say we get a hearing. Ms. Saskia, I've answered your question, but for me, the biggest shift is the accountability that certainly members on the board of Old Mutual feel towards tax risk management in the organization. And whereas previously a board-approved tax strategy was a nice to have, now a board-approved strategy is a must. And then operationalizing that strategy. So taking it to the degree of, have you implemented it? How have you implemented it? What steps have you taken? And how has that diminished risk? Those are the questions that I'm accounting for these days.
I do see we have some very interesting questions coming through from our viewers. Keep those questions coming. We're going to set aside time to deal with all of those issues. Bonang, Nazrien's responses are a nice segue into your role as somebody who has been on a number of boards. When you look at the information that has been delivered to you as somebody who either is acting from a non-executive director position or even executive director position, when you look at that information that comes from somebody who is designated to look after tax, do you find that that information is sufficient? Would you, as a non-executive director, want to be more involved in that information, how it's put together and the entire effort of it? Or where do you think the know-it-all should be when it comes to the non-executive directors and how they engage with those who are designated to look after tax?
So I find that the information that is being provided of late is actually adequate, but we can do more. Considering the huge aspect around social justice on tax collection and therefore its subsequent usage, there is no board that has no concern that at the very minimal, they are paying their fair share, because, Edward is absolutely correct that one of the things that are keeping boards awake at night is to ensure that corporate decision-making is consistent, not only with the whims of the shareholders, but with a much broader stakeholder community, the society in which they are located, the community where they go through. Had we had that mentality, I can assure you Marikana would not have happened. Therefore, in the 21st century, we cannot say one of the primary responsibilities of directors is profit maximization. Not in the 21st century, you can't. I think, especially in an era of pandemic, number one is to survive, because if these companies can survive, they're already profitable. And they'll survive, of course, by cash preservation and strengthening their balance sheet. Number two, it's about ensuring that companies and boards deliver this notion called added value. To ensure that as a company, you see, business can't continue to be an island of prosperity in a sea of poverty, because where business does well, society normally does well. The third is to ensure that as the board, we hold the executives to the commitments that they've made, so that there's this notion of final accountability. But also it is the job of companies, of business, to ensure that we do no harm. That's why the focus on ESG. That's why in most companies, the number one agenda item is HSSE as an acronym for health, security, safety, and environment. But also is to ensure that actually it's business's responsibility to make the world a better place. The world can never be a better place where the rich continue to be richer and the poor continue to be poorer. That's what leads to insurrection and social instability. For me also, it's about ensuring that business does not look at government and say, no, but you must give us the skills we want, especially for our artificial intelligence, Internet of Things, cryptocurrencies, etc. We must grow our own team, but that's our job. That's not anybody else's job. So we must do that by taking this notion of education much more seriously, especially because this is the only avenue where the majority of our people can transcend social classes. We live in environments of the lowest confidence, trust, and hope since the Second World War. But our problem is that we don't even have the same picture of the diagnosis, so that the prognosis can be agreed, and therefore we can put together action plans that ensure that as the social partners, we act in an integrated and coordinated manner to have a reasonably coherent understanding of how we move from point A to point B. Lastly, what then is one of the remedial actions to ensure that we address these issues of trust, confidence, and hope? Because leaders are dealers in hope. Like share price, it's driven by rumor and speculation. Until and unless we have trust in government, we're not going far. Number one for me is to ensure that the top state captured miscreants are put in prison. We estimate that in the 4 years of the 9 wasted years, 1.5 trillion was stolen. In those 9 years, on average, 200 billion was siphoned off just to the Zupta families. That's a lot of vaccines we could have bought, hospitals and clinics. Lots of kids we could have sent to school. We must secure vaccines as a matter of life and death. We need to implement the structural, systemic and systematic socio-economic reforms that we've been talking about for the last 10 years. We must reduce government debt. We must fix the more than 740 state-owned enterprises and state-owned companies. We must increase our spend on infrastructure, not just on consumption, but on the investment side, on the production side. Lastly, we've been talking for 10 years about auctioning the 5G spectrum. 10 years later, 5 ministers later, we could make the decision on Wednesday, and on Friday, you bank a minimum of 20 billion. Now, when you say so, we're going to auction spectrum at the World Economic Forum. People roll their eyes back into their heads. They're underwhelmed. And they say, don't tell us about that because you've been talking about this for the last 10 years. You have no capacity to act. In fact, you've got no political will to do it. And it's a low-hanging fruit. I think at this rate, Botswana, Lesotho, Namibia, and Eswatini will be on 6G and will still, as a country, not be ubiquitously on 4G. Nastasia.
Two more questions, and I'm going to try to get as many of these questions that are coming through from our viewers answered as much as possible. Of course, we do want you to get value at the end of this conversation. Geoff, I'm going to come to you with this one because over the years, when it comes to stock exchanges enforcing, corporate governance amongst their members and making sure that people are adhering to, call it best practice or the rules of the game, should we then have a discussion about having far more disclosure, tax disclosure that is, from members who are listed on particular stock exchanges? What's your view?
Thanks for that. It's a very vexed question, I think. Disclosure at one aspect is not the panacea for every ill. Now, I think we have a tendency to say, well, as long as you disclose something, the public are aware, everybody's aware, and we can continue with a particular practice. To me, it goes deeper than that. It's not just a question of ticking a box. Certainly, if you're a shareholder, you should, and you think particularly within the South African environment where 99.9% of shares are held institutionally. They have professional fund managers, etc. And part of the fee which you pay these fund managers is to actually do a proper analysis on companies. Now, where these fund managers are acting within mandates, you would expect them to also have an understanding and put pressure on companies in terms of the broader context to say, okay, well, if we're going to invest in you, then these are the standards that we as shareholders expect out of you. And so it's not just a question of saying to a company director, you must do it. There's an obligation on shareholders as well. If shareholders drive and if shareholders need additional disclosure, then they must request it. I'm not sure it's necessary for an exchange to impose additional obligations on companies, which may not necessarily add any value, because anything you do must add value. You mustn't just do things for the sake of doing things. Now if I flip that around, there is a sort of sense I get that that government and perhaps tax officials look at corporates in a sort of criminal aspect. If you're making money, you must be dodging tax. That doesn't necessarily hold true. It's a hell of a generalization I've made, but there is a sense of that. To my experience, corporates take their tax obligations very seriously, and it's not just about the bottom line. Corporates, certainly listed corporates and corporates that we deal with, are very much aware. The type of people on the boards are very much aware of their social obligations, and the fact that if you're going to drive profitability, you're going to drive your brand and all the aspects around it, that you cannot exist in that particular island. But in order to foster that, everything begins at the top again. And I'm talking about economic policy. You've got to have an economic policy that enables corporates to make money. It facilitates the business, because good business, as a previous panelist said, is good for the company. For the country, and it'll if companies are making money, it drives additional revenue, which can be applied accordingly. I don't want to get into the debates again about the return on tax investment, which is beyond numbers. That'll be well discussed later. But from an exchange perspective, to get back to your question, you've got to look at the two aspects. What, if needed, what difference will full transparent tax reporting make if nobody wants it? And the question you've got to ask is, say, who is it for? Is it for shareholders, or is it just for the general public, or is it for the tax commissioner? So whilst an exchange can certainly impose that requirement, and I can do it tomorrow, I can set a rule, I can publish it and say, you must publish you must have more tax disclosure, etc., and how you derive accounts. Will anybody read it, and will anybody take cognizance of it? Will it affect the manner in which investors, i.e. institutional investors, invest in the company? Because let's get down to brass tacks here. It's only shareholders and investors that will actually drive change in a company if they don't like it. They're the people who appoint people to the board. And that's just a contrarian view, I suppose. The next question is then, is an exchange qualified to be able to say exactly what type of tax changes should be disclosed? Is it not something which should rather come, if required, from the tax authorities, of which an exchange can then apply? So a little bit like the King Code. The King Code is a code of conduct. Listed companies have to comply because of listing requirements, but unlisted companies don't necessarily have to. So if the tax authorities had to come up with a clear strategy and a purpose for a tax disclosure, which would be to advantage what people want, then certainly as an exchange, we would insist on that. Because it obviously has broader impact about public disclosure, and it informs shareholders. But at this point in time, it's debatable whether such a demand has been made. The capital markets are going through a difficult time at the moment. There's a whole lot of delistings occurring because the compliance obligations on companies are disproportionate to the benefits of listing. That's driving these companies off exchanges into the private equity markets. Now, the standards of corporate governance in general in the private equity markets are not necessarily as high as in the public markets, because the focus of private equity is very different. And I say that as a generalization before I start annoying friends within the industry. But, purpose and function of doing something. If there's no value in it, don't do it. If there's value in it, do it. But the obligation ultimately rests with shareholders.
I'm going to bring it back here to Johannesburg with Marcus. Geoff touched on the King codes, and we know that there is a requirement for transparency and responsible tax strategy, etc. I mean, how are companies relating to that particular line? Do they know what to even do with it? Does it, expand a little bit further as to how to go about it?
Nastasha, to answer the question, I just want to again backtrack and just pick up on some of the other important commentary that's been made. The one thing I want to bring into my answer is what the commissioner said on the role of an NED and that they don't have to be a technocrat. That's very important because there's links to what you're now asking me on King 4. It's just, that's been in operation for a while now. It's nothing new. Everyone knows. But with King 4, it took quite a lot of consultation, and I had a little bit of involvement in the process to get to a point where we actually explicitly referred to tax. But it was very limited. It was just, you need to be transparent with your strategy, and it has to be responsible. We didn't have any real guidance or a standard or something tangible to know what to do with that. So different levels of maturity in terms of the different approaches that corporate has taken with that. And it is unfortunate that it took a pandemic for us to realize the impact and the importance of tax in the organization and the contribution or the value that needs to be created into this ecosystem. The commissioner can correct me if I'm wrong, but the last stats that I had a look at, we had just shy of 800,000 corporate taxpayers, and 25% of those, more or less, had a positive taxable income. So this again links to the assessed loss comment that was made. And as an NED sitting at those boards, thinking, the landscape has changed. We have many stakeholders now dependent or looking at tax information that has to come out or be a message that has to be articulated from a company. And to me, it's not so much just about what we do on the reporting side. Do you need a regulated report? Let's prescribe what you put in it. It's how we get to that. And good governance and the principles that's been in existence for years, and this is the point where I want to bring in a conversation on all the professional bodies that we belong to. And there's quite a number of them. We have the Institute of Internal Auditors. We have the Compliance Institute. We have the Institute of Risk Managers. We have SAICA. We have SAIT. The list just goes on. They seem to all operate in isolation. So we have a governance code that will say you have to manage risk, you have to do an assessment of financial control, you have to have a combined assessment framework. I mean, there's a lot in that to put the board or audit committee in a position to actually demonstrate what needs to be demonstrated. But those are seen as general requirements applicable to business aspects, excluding tax. And tax, for the longest time, has operated in a silo on its own. And then at the end, we might or we may not include it in the message. You have the golden standard, like we've heard Nazrien and Bonang telling us what they're doing in their respective organizations. But for the general part, the rest of the corporate tax base don't actually get to that point. And there's challenges, whether it's budgetary, capacity, skills related, the list again goes on. And I think it's time for us to bring all the parties into this conversation so that we can satisfy what is required by all these different tax stakeholders that we're sitting with now. So an Institute of Internal Auditors, they have a role to play. They have a standard to abide by. They are the generalist. But if in my career, I've moved between being in practice and being in commerce. So I have a view of both sides. And I've dealt with internal auditor, risk manager, compliance officer who have their professional body accreditations. And because they're generalists, they don't know what to do when it comes to tax, because it's seen as a technocratic area, yet all we want to know is, how do we get to that point, or the data that we need to disclose? And what the pandemic has done, as I said, it's made us realize how significant it is to your cash flow and how important it is to manage taxes because of the value it will create or not. And because of that, the concept of your total tax liability that needs to be managed at a board or audit committee level is becoming very important. So we can't just focus on one tax type. You have to look at the package, and you need to know that you were in control of that total liability and how you got to that point, the decisions that we've made, the calculations that support it, how we've managed the risk, the controls, everything has to be considered. And all of that information has to be relayed to an audit committee or board. Otherwise, how will they know that the organization has taken the right measures, they've performed their line of defense, and we've ended up in an acceptable situation, and then take that message to the commissioner or to the market or the rest of the tax stakeholders? So I think it's time for all the professional bodies to get together and a type of a roundtable set up and have these conversations, because we're going to have to start integrating the tax agenda into all aspects of the business. It has to be integrated all the way to a transactional level where it occurs, and we have to build the picture from there.
Commissioner, I'm going to come to you here, and this is because one of the questions that was put forward on the chat facility rather talks about the ongoing, change tax and, seeking additional taxes, and whether the burden that has been placed on taxpayers is on a limited amount of taxpayers, or whether it's on corporates. And I see that you have answered it. I want to take this question a little bit further here, because throughout this discussion, we've been talking about the social contract. And I suppose when you look at the idea of what a society is, when you boil it down to its core, it's all about all of us agreeing to rules, either spoken or unspoken, in the way that we conduct ourselves, in the way that we do certain things. We all agree to be part of this. I suppose the other frustration, perhaps from individual taxpayers or even corporates, is that if we're all part of this social contract, be it yourself as the SARS Commission, the corporate taxpayers and government, and we're not all playing by the same rules, i.e. there are three, or as Marcus said, 4 participants in all of this. If 3 people are playing by the rules, i.e. the commission, the taxpayers, but on the other side of this contract, there's leakages, there's corruption, there's lack of accountability, there is a whole host of stuff that have unfolded over the past 10 or 15 years or so. Does it make your job as the commissioner even harder, because a contract is only as good as those who are willing to participate in it and play by the rules of the game?
Okay, thank you. Thank you, Nasasi. Let me just attend to the first question already, which I in part responded to online. But the notion that some people pay tax and others don't pay tax, let me just bust that notion. Every South African who is a consumer in the South African economy is a taxpayer, because taxes are included in every sale, and some more than others. For those who sin more than others, you pay more of your fair share of taxes. So by virtue of the fact that you're buying in the economy, you're paying tax. If you're not buying in the economy, you have a bigger problem, because you have economic exclusion, which is a significant and unfortunate reality in our society, which we have to attend to. Secondly, again, contrary to what is often mentioned by commentators, the small guy, the salary earner with a single income, standard payroll deductions, have almost no way to fiddle with their taxes. That's why we could auto-assess about 3.6 million South Africans because of the visibility and the transparency and our access to third-party data. So if you're an ordinary standard income earner, you're paying your fair share of taxes, and there's very little room to maneuver out of that. And so therefore, the real opportunity for fiddling, for avoidance and evasion will, in any society, South Africa is no different, be with large corporates, wealthy individuals who have the resources to arrange their affairs in a way that initially, as is permissible, minimize their tax obligations, but then at some point they cross the line and they are actually into the role of evasion. And so if you are paying more taxes, it means you are more privileged because you're deriving more benefit from the economy, whether you're a producer or a consumer. And so therefore this distortion that some people don't pay their fair share is more slanted toward large corporates, medium companies, and wealthy individuals, not with standard income earners and little people. On the second point, the direct answer, Nastasia, is absolutely. Our job is inordinately more difficult in the current environment where the public has lost trust in government, where the public see the levels of corruption, often state-sponsored. And then when SARS comes and say, please pay your taxes, then people will obviously then say, why should we when others are stealing from us? And so it is inordinately difficult under these circumstances. But let me also say, levels of low compliance and morality is not the birth of state capture. It pre-existed state capture. What it has done during state capture, it has proliferated because state capture created an environment more conducive and more tolerant of corruption across all levels of society. And so therefore I'm saying is, when we get through state capture, we still have to ask the hard questions about what kind of a society are we and how do we contribute towards that society that we wish for ourselves. Thank you.
Bonang, I want to come to you here. We've spoken briefly about the profile of a non-executive director and whether understanding or having a background of tax is sufficient. If you could sum up perhaps two qualities that you think are important for a non-executive director in order for them to bring value to the table, either from a tax leadership perspective in working with the head of tax, what would those two qualities be?
So again, let me be absolutely explicit, consistent with the commissioner. You don't need technical competence to be an effective and efficient non-executive director on a board of a company. The same way that we don't send botanists after drug lords because you don't need to know the chemical composition of the drug, but you need career police women and policemen. So if you can sell cars and potato chips, you can sell seats on South African Airways because your job is to sell. So sometimes erroneously we think you have to be a clinician and therefore a doctor before you can manage a hospital. Managing a hospital is like managing any other company. It's about supply chain management. It's about optimization of resources, especially the most important resource that you have, which is your people. So I think we can't dispense enough with this issue that to be a non-executive director in mining, you must be a miner yourself. Absolutely not. But let me answer your question in the times of the pandemic, not just normal times, because ordinarily our fiduciary responsibility is best defined in the PFMA, much more than the definition in the Companies Act and indeed in King 4, because it says to act in the best interest of the entity, and not in the best interest of the shareholders, nor the best interest of the employees. Therefore, this is where it really demands your duty of care, skill, and diligence. But most importantly, and the one we don't speak about, is the duty of faith. So for me in a pandemic, Of course, you can say, what should be the focus in 2021? You can say that focus, of course, is financial stability. It has to be about driving excellence and this notion of holding people finally accountable. But if you say our most important asset is our people, you then say, for 10 months, we've been held up to here. And yet, we are social animals in bone and marrow. We yearn for and we miss human contact and human hugs. So what we have seen increase is the number of suicides, gender-based violence. So how can we focus on the well-being of our own employees? That's the job of a non-executive director, to ask those questions in the board, to say, are we connecting with our people? Are we regularly saying, are you okay? Can I do something? Because health, it's much more than the absence of disease and infirmity. It's a state of both physical, of emotional, of social, and spiritual well-being. We should all be aspiring for that state. Under these circumstances, the mental health of our people is our number one, single most important priority. Nastasia.
Marcus, how do we take this conversation forward? I mean, we've, ventilated a number of issues. In fact, there are others that we could unpack even further if we had the time. In order for this to be meaningful and make sense to a whole host of stakeholders in this ecosystem, how do we take it forward?
We have to demonstrate leadership on tax. For me, this is currently the most single important agenda item for what the country needs. And that leadership will require relevant information to be provided to them, like I've said. And it's that total tax liability and how we get to it that we need to make available to them. And with all the rest, the other professional bodies, I think the next step is maybe to set up a roundtable workshop between SARS and the rest of those bodies so that we can start integrating tax where it needs to be. Something that Bonang mentioned, which I'm very happy he did, was ESG. I have picked up countless ESG disclosures or reports and initiatives that have been lacking on tax. Yet it's part and parcel of the social conversation that we're having and the impact that you're having in the society in which you operate. So we are going to have to beef up those disclosures. And I think having something tangible in terms of a standard that NED should be aspiring to is maybe not a bad thing to explore.
All right, so let's come to the third poll question. And while you answer that, we'll get some closing comments from Geoff and Nazrien. The third poll question reads, do you agree that non-executive directors should be held accountable for a company's tax affairs, including transparent reporting and disclosure to all stakeholders that have an interest in the company's taxes? Of course, you can either vote yes or no. Nazrien, while the audience, participates in that poll, I just want to get some closing comments from you. I mean, how do non-executive directors help you in order for you to meet your objectives as the, global head of tax? How do you have that relationship that is meaningful and creates value for everyone?
So I think, Nastasia, thank you for that question. I think the relationship is actually a personal one. So I know for a fact that in my employment, for example, into this role, that there was input from the non-executive. So it wasn't just about my competence and my ability to fill the position, but it was also me, and questions around personal questions, if you like, around my, I guess, figuring out what my value system is and whether that aligns with the organization. And I think when it comes to non-executives, the greatest role that they can play is one of interrogator, if you like, or somebody that asks the questions on the basis of how the information that they're receiving or seeing is, in what context that is seen. And when they ask the telling questions, it actually requires me to rethink, what is it that I'm saying? What is the message? How am I actually dealing with the mandate that has been given to me? And so that relationship is not a friendly one, if I might add. It is one of respect and where it is actually a given that there's complete alignment between the moral compass of the people that are managing the function, as well as those that are setting the mandate and, are setting the parameters within which teams are supposed to be operating. I hope that answers the question, Nastasia.
Thank you. Geoff, just to, wrap up here, I mean, the role of stock exchanges in this conversation as it relates to non-executive directors and the issue of, tax leadership and governance, how do you see it, unfolding in the years to come as somebody in your position?
It starts at the top. I think, there isn't, to answer the third question, as I mentioned earlier, non-executive directors are just as liable as directors. So there isn't a distinction to me in terms of the responsibility for tax between the two. As a previous speaker said, or panelist said, you don't have to be a botanist to catch drug lords. It's the same thing. You don't have to be a tax expert per se. You obviously have to be a competent NED. You must understand the corporate environment, otherwise you shouldn't be there. But your role is to interrogate things a lot more. And part of that interrogation process is to interrogate the moral direction of the company. And that is absolutely critical. I mean, we can see on listing applications, and we've turned down many just by speaking to the certainly the executive directors of companies, what their intentions are. It's a feeling you get. And, is that the type of company that we necessarily want to be listed? No. But as I said earlier, it's also incumbent on shareholders. If shareholders are happy that a company pays us the least tax, etc., then you have to educate the shareholding representatives. So it's not just about the tax fraternity fulfilling their obligations. It's also about institutional shareholders understanding that a corporate is not just about bottom line. It's not just about ROI the whole time. It's about the broader impact of what that company is doing. And this is where the ESG funds are starting to play a much more active role. And from an ethical perspective, how do you set it? It sets obviously at individual level, but I think society in general can have an expectation of what that ethical approach should be. And then I think finally, my last comment, and this is coming from a typical investment banking background, you get the behavior you reward. And if the reward is for a tax expert or a tax practitioner within a corporate to try and hide every single revenue cent, etc., and you get rewarded for that, well, that's the behavior you'll get. And it'll be very difficult for somebody who's not going through the accounts in minutiae to pick that behavior up. But you can set different parameters at the top to say, it's not just about as much savings as you can get. If your KPIs and your mandates within an organization are to achieve a much broader aspect and you get rewarded for that, then that will drive the tax compliance as well. And that's where the NEDs who are to some extent disassociated from the direct remuneration schemes can, they don't have that conflict. They can start setting those agendas on REMCOs to say, for these types of people, this is the behavior that we want to reward. It's not just about bottom line.
Right, on that note, that brings us to the end of our discussion. Thank you once again so much to our panelists, Edward Kieswetter, the commissioner at SARS, Nazrien Kader, who is the head of the global head of tax at Old Mutual, Bonang Mohale, the chairman of Bidvest, and of course he's also the chancellor at the University of Free State, Geoff Cook, who is the executive director at ZARX, and of course right here with me, Marcus Botha, the BDO head of corporate tax. tax. As I say goodbye, we are going to play out with a message from SARS. I hope you have found this discussion quite engaging, and I look forward to participating in more of these kinds of discussions going forward as we unpack other issues within the non-executive director space as well as the tech space. That's it from me. Goodbye. Here's a message from SARS.
Fellow South Africans, I'm addressing you.
All your years of paying tax, you still wonder, why does it matter?
It is true that we are facing a grave emergency.
It matters now more than ever. It matters to those who are exposed to harm to keep us away from it. The ones that leave behind all that they love. Your tax matters to them. Those who spend endless hours standing on their feet to care for others. It matters to those who are always at the heart of any crisis and our future generations. It matters to those who put so much love into giving selflessly to each and every family living on the breadline. It matters to all of us. To all taxpayers, pay your fair share. Do it for your nation. Your tax matters.